People saying like the price should be higher. And I've kind of defaulted now to my base response is based on what? Why should the price be higher? And where should it be? Bitcoin is actually trading in a way that it hasn't traded before. However, this kind of market structure is very normal, actually, and it's actually very, very healthy.
Does that mean the parabolic runs are over? Are our dopamine receptors never going to get a 2017 type hit in the price?
Yeah, well, look,
it's insane.
Those two are the assets that people are saying, if you want to defend yourself against the storm that is coming, that we can all see coming, then nothing stops this train. Gold and begrudgingly Bitcoin. But that's what we did it, guys. We memed this thing into every macro podcast, much to the point where they hate it, but they have to say it because they know it's true. Find me another asset where you've managed to put $1 trillion in and get 1.5 trillion out over the span of 15 years. It's a massive, massive wealth creation event.
Love it.
People will often see my analysis and be like, why is this dude always talking about selling? Because selling is the most bullish thing in Bitcoin. And let me explain why.
All right, what's up, everyone? Welcome back to another Simply Bitcoin IRL. We got a great rip for you guys today with an awesome guest, James Check of Check On Chain, founder, lead analyst. I would say one of the best on-chain analysts. So we're going to just dive straight into it. And I think the question that everyone is asking, I know our audience is asking this, has the Bitcoin market structure changed? And really the idea is, are we going to get bored to death to $1 million? James, welcome. What's your thoughts on this?
Thanks for having me on, mate. Yeah, welcome to the world of Chopsolidation. This is the spice and flavor of the cycle. It's amazing because, like, in my time learning about markets, Bitcoin was the first asset I ever bought. And it was actually price that initially interested me. Like, I didn't really understand Bitcoin. I was trading amongst everything else. Like, I never clicked until the end of the 2018 bear. And I was learning about how price structure works. And you hear this, what I got termed as quiet and trending markets, up, sideways, up, sideways, up, sideways. And I looked at Bitcoin. I was like, it never does this cool pattern. Like, for me, it was just red, right? It's just red and volatile to the downside. I was like, this sucks. What's going on? But there was something about price that fascinated me. And then in 2019, very, very few people were kind of paying attention to it because it was the end of a bear. And then suddenly, and I remember it crystal clear because I was looking at on-chain data and I thought, I've got a year where we're going to chop around down here at 3K to 4K. And I have my shitty engineering salary and I'm saying, oh, look how much corn I'm going to stack. And then April Fool's Day. And I know because I was on site, I was in London at the time, I was working up on site and I could not for the life of me, if I wanted to, actually buy. I was just completely offline for a couple of days. I could see the price, but I couldn't do anything about it. And then up, sideways, and it just started ripping. And next thing you know, right, we're in July and we're trading up around 14K. So we've gone from 4K to 14K. It's a super powerful move. And that was the first time I ever felt I've been left behind. I didn't buy enough. And I keep that memory to this day, like pain to the upside. Now, in our current market structure, zoom out, have a look at the price chart. That's exactly what it's doing. Up, sideways, up, sideways, up, sideways. And the difference is that period in 2019 was 4K to 14K, 3 months to maybe 2.5 months. Here, it's taken us 3 years. Now, we've gone up quite a bit. We've gone from 15K to 120K, but it's much slower. And you get these like 8 month, 6 month. And there's, people will say, oh, it's not really sideways because it goes down. But it's like, my thesis when I describe what Chopsolidation is, close your eyes, come back 6 months later. The price is exactly the same, but the bodies of long and short traders alike line the road on the way to get there. And that's more or less what we've seen. You close your eyes for 6 months, the price is dead flat, hasn't gone anywhere, but people have been liquidated all over the place. So market structure has changed, but it's also not new market structure. So Bitcoin is actually trading in a way that it hasn't traded before. However, this kind of market structure is very normal, actually. And it's actually very, very healthy. So very, very constructive. And the best way that I can help people think about this, when we rally, historically, we've gone too far, too fast. And what's happened is the market has then had to correct back down. It's overcorrected to the downside. And then you've got this slingshotting around until it finds the right level. In many ways, what Bitcoin is doing is it's repricing only slightly above where it should have been. And then it's consolidating those gains. And what that allows is investor psychology to become accustomed to. So think back to 2024. At 73K, it was exciting as anything. About 3-4 months later, you're like, feels normal at 50, 60K. I can see we're chopping around. 8 months later, you're like, Bitcoin belongs above 50, 60K. We like acclimatized to that zone. And then we did the same thing, right? We doubled. We went from $1 trillion market cap to 2 trillion. And then we chopped sideways between 90 and 100K, right? Yes, there was a deviation through that air pocket in between, 75, 85. But imagine telling yourself in 2023 or 2022 that 100K would feel normal. It feels normal. Right now, if it went back to 100K,
really
I'm like, that's a discount. So the way that this affects human psychology is so powerful, and it actually allows the market to just keep grinding higher. And that's why we're not getting the downside, right? We've got 32% corrections, and they lasted like 4 hours before the market bounced. So we're not getting the downside, but we're also not getting the ripping explosive upside because we're a multi-trillion-dollar asset. We're not going to get that as often at this point in time.
Yeah, absolutely. I like just my gut feeling. That's exactly what I'm seeing. I've been joking actually the last couple of weeks. It feels like we're trading the S&P 500 now. It's like, what are we doing here? We're like boomers trading the S&P 500. It's over for us. But you said a bunch of interesting stuff, and I'm sure there's a bunch of rabbit holes that we can go down. But I think the one that's really popping out for our audience here today, if we have changed the market structure, does that mean the parabolic runs are over? Are our dopamine receptors never going to get a 2017 type hit in the price?
I don't think we're going to get a 100x move like we saw in 2017. So I think people do need to just back away from that a little bit. Now, if we get it, the way I look at things, if you do get a parabolic run, that should be considered in the gravy portion, where you're just like, I was already very happy with the way that the market was trading. And me, I look at the market structure. Here's the way I would describe how different it is now. I got my old man to buy into Bitcoin in 2020. He rode the bull, and believe me, he rode the bear, and he told me all about it every step of the way. When's it going to go up, mate? When's it going to go up? He actually sold a little bit on the way up. Like in Aussie terms, I think it would have been like 136K, something like that, which is probably like 90, maybe, before we hit 100 and 110 or whatever. So he sold at 135. He's now asking me, hey, should I actually step back in and start reallocating? Because he doesn't know what else to do with his retirement money. So we've now got like somebody who is very, very conservative in their retirement years is now comfortable with the volatility. So whilst you and I, who are used to that high octane, super crazy moves, swings way too high, which are then corrected by swings way too low, they're now getting Bitcoin is kind of doing what it's supposed to be doing. It's gradually repricing, just stair-stepping higher. And this makes people like my old man, and we've got to remember, where is a lot of the wealth in the world? It's in much more conservative pools of capital than a couple of 30-year-olds swinging around their paycheck. So if you think about that pool of capital, these guys can now start coming in, whether they're retirees, whether they're money managers, whether they're not even in the world of hedge funds now. We're talking about pension funds that are really starting to think about this. This kind of price action allows them to bring big money. So the trade-off, guys, is you may not get the vertical move to the upside, but you're also not going to see your net wealth disappear by 80%, which, by the way, you know what helps adoption? Not going down 80%. That's really actually quite good for adoption. Slow, steady grinds. And I think there's a really cool concept here. Most people in the TradFi world, they don't know that Bitcoin traded at 1 cent, 2 cent, $100, $500, $1,000. They see IBIT trading from 25 up to 100. That's what they see. That's their price chart. They don't know anything. They just see one uptrend that never goes down. That's an awesome story.
Yeah, no, 100%. I've been saying that for a little bit. It's like, hey, okay, maybe we aren't getting the parabolic blow off tops, but at least we're not going to go back into, prolonged bear market, and especially us. And I know you've been talking about, hey, we're a lot of us young guys, we're getting a little older, we're maturing a little bit. We probably like a little less volatility. Personally, I can tell you, the last bear market being all in, just 100+% in Bitcoin, it was a brutal bear market. And
you want the vol until you get the medicine, which is the other vol. The other vol's really, really shit.
Exactly. Living off your Bitcoin during a bear market is pretty brutal. So, hey, if we don't get a, 100x, 10x move, at least we won't get 80% drawdowns ever again. I think I'm okay with this. So I do have a couple of questions in regards to just the market structure, or rather, what do you think was the catalyst? Do you think that when the ETF got launched, or just a new institutional investor coming in, like, is it one or both of these things that's fundamentally changed the market structure of Bitcoin?
Yeah, there's a lot of components here. And so the truth is every cycle is different, right? So there's this what I love about markets is there's always this dichotomy. You can look at a price chart and you can go, just stick an extra green candle on it. And you're like, oh man, that's the most bullish chart ever. And then you swap that around and put a red candle. You're like, oh man, that's a double top. It's over. So like, it's very easy to hold. You have to be able to hold two views at the same time. So the way that I look at it, this time is always different. And also the thing that when people say it's the four most dangerous words in finance, it's because human nature is never different, right? The hardware that's in here between our ears hasn't changed for hundreds of thousands of years. So the human response to things, there is a possibility that we have a blow off top. This can absolutely happen. But every single Bitcoiner should be like, oh no, here we go again. I've seen this before, right? So you got to keep those things in mind. Now, what is different about this cycle? Obviously the ETFs. But ultimately, the ETFs are an access vehicle. They just simply allow new money to come in. Now, something I think is really worth highlighting, the options on IBIT went live on, I think it was late November last year. If you look at the dominance of IBIT over all the other ETFs, if you look at like a big dominance chart, up until November last year, it basically looked like GBTC was losing dominance and everything else was growing. From November onwards, everything else stopped growing. And IBIT started taking over both sides. So not only is it consuming GBTC's market share, but it's actually consuming all of the new market share. So that is telling you something very, very important. Options really matter. And this gets slowly into the derivatives and the paper trading and all that stuff that people love to talk about. But if you think about what that really means, and this has been I wrote a piece a long time ago called Paper Bitcoin. And my take there was, I know everyone likes to talk about paper Bitcoin and how it's killing Bitcoin. But the truth is, if a big money manager can hedge $1 billion worth of risk, they can buy $1 billion worth of spot via the ETFs. They can now hedge the size of their portfolio. Without the hedge, they can't put the portfolio in. So we're in this interesting world where in order for big institutions to come in, derivatives actually enable them to hedge that risk. It allows speculators to take risk away from those institutions, and this allows the big money to come in. So that's a big factor. As a result, as these derivative markets get bigger, you then get things like volatility capture, covered calls, sold puts, strangles, all sorts of things. And because these are leverage instruments, it's actually easier for many entities to defend certain levels. So let's say they've sold a bunch of covered calls. They don't want the price to moon because then they're on the hook for those covered calls. What they can do is they can potentially sell into the spot market for a period of weeks, months, just to keep the market below their level so they maximize their returns, allow those positions to roll off, and then they can allow the market to move. And some people will say, hey, that's manipulation. But I would just say, well, look, the other side, the one who wants it to go above their call option, they've also got leverage. They can use the same machine guns in the same battle to try and take control. And any trader who knows how markets work knows that we don't go up or down in a straight line. There's always corrections. There's always consolidations. So that's essentially how institutions trade this thing. They know that the market has to cool down sometimes, and they look for periods when it's ready to cool down, and then they take those options positions because they know that the probability that the market's going to keep going is slim. Great example, if we look at gold, gold added like $7 trillion to its market cap this year alone, like a massive, massive run. And when it got to 3,500, if you look at its distance from the 200-day, 200-week moving average, it was so stretched. It was so unbelievably stretched. It doesn't take a genius to say, look, gold is probably going to be much higher in 10 years' time. It's probably not going higher in the next 3 months. Every derivatives trader in the world sees the exact same piece of information and goes, yeah, I'm going to start selling calls and puts and stuff around this to just capture some money because it's probably not going anywhere. It's going sideways or maybe even lower for the next 4, 5, 6 months. I'm going to capture that volatility, get paid to wait, and then I'll jump back in on the spot side when it wants to start moving again. So this is just how markets work.
Yeah, 100%. It really is kind of a perfect zeitgeist of a market maturing in real time. Obviously, we love the wild west of Bitcoin, but as you said, you know, this time is different, not in the classic way of everyone saying this meme, but new institutional investor, new products being released. It does fundamentally change the market structure here because there is a new investor in the market. As you like to talk about, you know, everyone's seen the Wall Street psychology cheat sheet. Humans are humans, our psychology is the same, and with a bunch of capital, they're going to basically trade Bitcoin in a fashion that they're so used to, which is what we're seeing happen right now. It really kind of leads me to my next question, which while you were talking, I was thinking about, you know, us Bitcoiners, we've been talking about hyper-Bitcoinization forever. You know, it's always a fable. It's happening. Hyperbitcoinization, super cycle this time. Now we're seeing it seemingly happen, but it's just not happening how we thought it would. A lot of people thought it'd be like an S-curve adoption. What we're seeing, if you're just looking at the data, just, you know, without any kind of colored lens on it, it seems like we've entered this stair-step functioning forever, just going to continue to step upward. So is this how hyper-Bitcoinization happens, James? Is this how we're going to take over the world? Is through this stairway to heaven instead of this like S-curve adoption? What's your thoughts on that?
Yeah, well, look, if there's a metric that I can point to that is, in fact, the hyper-Bitcoinization chart in one metric, it's the realized cap. So everyone's familiar with
Love
the
it.
market cap, take the entire supply, times it by the last traded price. We all know that's not a realistic view because a lot of coins are lost, a lot of them don't trade, they're HODL, whatever. The realized cap is a much better metric because it prices every coin at the time when it last moved. So for all you sat stackers out there, every single time a coin has hit your cold card, we're stamping at a database level. We can stamp and say, well, that UTXO is valued at that price, right? It's going to be an estimate of your cost basis. That just passed $1 trillion, and it's in this beautiful long-term uptrend. So if you think about that, if you bought $10,000 worth of Bitcoin back in 2019, that is saved at that $10,000 price point. So that's the amount of wealth in 2019 dollars that you invested and stored in Bitcoin, you entrusted to this asset. And that thing is just grinding higher, and it's just past $1 trillion. So Bitcoiners have collectively trusted $1 trillion of hard-earned, serious proof of work from their lives to this asset. That is real measurable value. And if you think about the market cap at like let's just say $2.5 trillion for easy math, that means that the amount that their appreciation, how much value they've actually grown. So they've put $1 trillion in, but they're sitting on about $1.5 trillion of unrealized profit. So that's the profit margin on the amount that's gone in, which is quite a remarkable sum when you think about it. Find me another asset where you've managed to put $1 trillion in and get 1.5 trillion out over the span of 15 years. It's a massive, massive wealth creation event. And as I said, go back to my old man. He now feels willing to trust more of his savings to this asset. So yes, hyper-Bitcoinization is going to happen over a long period of time. I think when we talk about it, we need to really think about like, what does that actually look like? What does that mean? Is that like replacing the dollar? Because I fall in the camp where I think the odds of us replacing fiat are very, very slim for several reasons. But first and foremost, people just don't like change. This is why even hyperinflating currencies, they'll still use the hyperinflating currency. Yeah, they'll save in dollars and apples and anything else, but they still transact in it because they're forced to. And the other one is that governments won't let go of the printing press. So you've kind of got this double-edged sword where the populace actually won't let it go, and neither will the government. So you know, look around you. How many times when you've got those two working against you? This is why Bitcoin is like 2% of the population. We're a slim minority. So the vast majority of people probably won't give up their fiat anytime soon. However, more and more people are trusting more and more serious capital. And, you know, I listen to a lot of macro podcasts, a lot of, you know, finance, all that thing. The amount of people that I now hear begrudgingly, and I love that, it's begrudgingly, they say, if you look at the environment around us, fiscal dominance, this, that, and the other, and they go, you know, it's gold, and I hate to say it, but it's probably Bitcoin. Like that's, and it's those two. Those two are the assets that people are saying, if you want to defend yourself against the storm that is coming, that we can all see coming, then nothing stops this train, gold and begrudgingly Bitcoin. But that's what we did it, guys. We memed this thing into every macro podcast, much to the point where they hate it, but they have to say it because they know it's true.
Yeah, 100%, guys. You know, don't let your memes just stay dreams, or what is it? I forget how they changed it. The Bitcoiners changed it.
Yo, I want to tell you about the best place to build your automatic self-custody Bitcoin stack. I'm talking about bitcoinwell.com. What makes bitcoinwell.com different is that it's a completely non-custodial platform, meaning as soon as you buy Bitcoin and the funds clear, it goes straight to your self-custody Bitcoin wallet address. And that perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Support Bitcoin on-ramps that are self-custody by default. To get started, go to bitcoinwell.com today. It takes 2 to 5 minutes to sign up, and bada bing, bada boom, you're ready to buy Bitcoin.
You brought up lost coins, and I think this last week, and you might have the amount of coins that moved this last week more clearly in your head, but we saw, you know, tens of thousands, if not 100,000 coins basically move last week. And there's two questions that I really want to kind of dive down. One is the idea of lost coins. Recently, or rather historically in Bitcoin, we have this kind of idea. There's probably like 4 or 5 million lost coins. The last week we saw some 2010, 2011, 2014 wallets open up, move, do some transactions. And it really begs the question, is there that many lost coins? And then the second part of this, James, is just the fact that we had someone do an $80,000 or 80,000 Bitcoin transaction and the market barely blinked. And everyone was just like, oh, why are they selling all this coin? And you're like, guys, let's take the positive of this. They sold 80,000 coins. In the earlier days when the bear whale came in, he had 30,000 coins, nuked the market, and now Bitcoin is still at what is it, 115 right now? Like, this is a sign of a very healthy market. So, James, you can take both of those questions or run on one of those.
No, I think these are really instructive events. When these old coins come back to life, it's so important because you do remember that there's actually people out there, very few of them, but there are people out there who have hodled 2010 and they've gone through that whole cycle. And then the immediate question is, well, why on earth is this selling? And it's like, bro, he's up $10 billion. $10 billion. You can buy a country with this. Like, and you take it for what it's worth. But this is what Galaxy said, because they were the one that did all the OTC and the sales and all that. They said it's for inheritance. If you're trying to move 10 billion between however many people in that inheritance plan, you need a legal team to sort that out. That's massive. So, they could just be at a phase of their life where like money literally isn't an object for them anymore. It's so beyond irrelevant. Like they can fund whatever they want forever. So don't worry about profit. They're in profit. They've done it. They made it. And by the way, how many more 80K clips has that dude got? You know what I mean? Like that's one of them. So I think the first one is it's a reminder that you're right. I still believe that the lost coins is probably up and around 4 to 5 million. Probably, I think the last time we estimated like 18% is likely to be live. At the end of the 21 million, it's something 18% also, and will be live. At some point, a lot of those coins will come back, right? If you run technology long enough, whether it's quantum or something, eventually a lot of those coins will come back to circulation at some point in time. So the idea of lost is always, it's ephemeral. It's a temporary measure of coins that don't have the private key right now, but the private key still exists. And if someone can obtain that private key, then those coins can move. But I think the point you raised about the sell side is so important. And people will often see my analysis and be like, why is this dude always talking about selling? Because selling is the most bullish thing in Bitcoin. And let me explain why. Every single sold Bitcoin has the same weight as every single other sold Bitcoin. One sold Bitcoin is one sold Bitcoin. The difference is we're now seeing it, as you said, at 120K versus 10K. And yet the market went down. I think the total was 9.5 billion or something. The market went down 3.5% and then did a Dalai Lama candle straight back up. When we're measuring sell side, what we're actually measuring is two things. Buy side, because you need a buyer for every seller. So when you see a lot of sell side, yes, that is the thing that can temper out a bull and slow the market down and top things out. But if it gets absorbed, you're actually also measuring demand. So I will often look at sell side pressure as a proxy for demand. And when I see the market absorb 9.5 billion and not go down, guys, imagine who is buying, the size and scale of those buyers. And the other thing it's measuring is the rotation of holders. Guys from 2010, they have done their job. They came in, they supported Bitcoin at its weakest point in time, and they hodled 80,000 odd Bitcoin for 14 years. They got Bitcoin to 100K. 100K was the dream scenario. Oh my God, that's our million. People have come in later cycles. That's the million target for us. They hit it. They got there. They made it. They can't really make it more. Like, what's the difference between 10 billion and 20 billion? It's like, I'm in the billion club. It doesn't matter. So for them, they've already made it, but they're rotating those holdings, right? Think about where you got your coins from. You got your coins because someone else was willing to sell, and that's given you an opportunity. Like for me, if nobody sold the coins and we went straight to $1 million and we repriced immediately, straight up to the level. And actually, there's a good analogy here. If you just observe the shitcoin world, they're going through a crisis because what they would do is the VCs would bid up the token to massive premiums, and then they would list it on Binance, and it goes down only forever. And you know what that does? That destroys people's confidence, and they never want to hold the thing. The process of the market actually helping people get ahead, Like if you weren't able to buy your coins at 1,000, at 10,000, at 20, at 50, then you wouldn't have any coins. It would just go to $1 million and you'd be like, oh, look at all those guys who have been around since 2011 and they got giga rich. That's actually not a healthy thing. The process, right? The process of markets and the process of Bitcoin getting there and the fact that we don't just teleport to 1 million is actually why Bitcoin is special, because it is the journey that we've all been on. And I like to also think about it from a more philosophical standpoint. What is the important part of Bitcoin? We can talk about the consensus rules. We can talk about mining. We can talk about the blocks. We can talk about all that stuff. At the end of the day, it's the UTXO set. It's the journey that holder base has gone through, the collective intelligence of coins changing hands, moving between exchanges, going between cold cards and whatever else. And then eventually we get to where we are today, which is after all that proof of work. This is the current standing of that ledger. And if all the other pieces broke, proof of work breaks, or this breaks, or that breaks, moving that UTXO set somewhere that's going to look after it, that's actually what Bitcoin is in my view, from a very philosophical standpoint. So the history is what matters. And that's also the only thing you can't replicate.
I absolutely love it. As a philosophy major myself, a trained philosopher myself, I love going down philosophy rabbit holes. But there was something that you said that I think begs the question. You mentioned it earlier in the show, paper Bitcoin summer. You know, this is all the rage right now amongst Bitcoiners, this idea of all the paper Bitcoin. But it leads me to the question, because we're seeing also right now the Bitcoin treasury hype. Like this is the new hype of this cycle. And you basically, I think we're leading into that. It's like, if you think of how much capital is coming in to scoop up 80,000 coins, these are some really deep bags. These are some really wealthy people. And a lot of people have been wondering, hey, if we have all of this liquidity coming into Bitcoin, like why is the Bitcoin price not mooning yet? You know, are they actually buying all this Bitcoin? Are these corporate treasuries actually buying UTXOs? Do the ETFs actually have this Bitcoin? And of course, you're one of the, I don't want to say guru, but you're one of the on-chain, so I'm going to say guru, one of the on-chain gurus here. So I know you're tracking where the buys are coming. And I think you're kind of insinuating that these ETF holders, the institutions, and the corporate treasuries, they are actually scooping up all of this coin right now. That's who's buying this stuff.
Yep. Yeah, and I often get this. So people saying like the price should be higher. And I've kind of defaulted now to my base response is based on what? Why should the price be higher? And where should it be? Mr. I believe that I should be able to dictate where the price of Bitcoin should be. Why? Why should it be higher? Like at what level? Give me a level and give me a rationale. And what I always get is blank stares and complete nonsense. Oh, but it should be higher because of all this buying. It's like, yeah, but what about all this selling? So the way that I approach this thing is, we know we have a lot of evidence. There's a lot of errors and changes and challenges with on-chain data tracking entities. You'll know this because if you see exchange balances are always in decline and they're always at 2.5 million Bitcoin, always, forever. For my entire career, they have always been in decline and at 2.5 million Bitcoin. It's always 2.5 million Bitcoin, right? Plus or minus 100,000. Every data provider has a different set of labels. Some of them do or don't include custody. It's a mess. It's hard to track. So first things first, you can't have any confidence in the data. That's the first thing. So if you're looking at exchange balance data, I can go out there and find you an exchange balance data that's going up because it includes different exchanges or ones that you haven't thought about. So that's the first one. What we do know is that no matter which one of these data providers you look at, when they look at Coinbase, they know they've got millions of coins. So the challenge actually, in my opinion, people say, but Coinbase is selling paper Bitcoin to these ETFs. So I'm like, well, we can see BlackRock's address. We can see Fidelity's, which is not at Coinbase. We can see all of these ETFs. We can kind of see in the coins because they have a very particular behavior, the way the, what do they call, the APs actually move coins in and out. We know Coinbase has a lot of coins because they have on their financial statements, which would require fraud by both Coinbase and their auditors. So we know that they've got these assets. We can see them on chain. And I can also look at when the market rallies, we see lots and lots of old coins come back to life selling. So I just look at that spread of information and I'm like, what is the story that it tells me? That they have the coins and that every time the market goes up and people start saying we're going up forever, Laura, that people start selling and we stop going up forever, Laura. So I look at that and I'm like, it looks like there's sell side that's stopping us from going higher. And then the paper Bitcoin stuff goes out the roof and everyone's like, oh man, they must be selling fake coins. They're all FTX. It's like, guys, based on what? Because I've never, not once in the whole time that I've talked about this, Sometimes someone will send me some backwater article from 2018 about Binance maybe having a market maker that did something. It's like, okay, you're going to trust CoinDesk on this, guys? Like, really? That's your source here? Really? You serious? So, like, come to me with some real evidence, because otherwise, and to quote the dude, that's just your opinion, man. Like, that's just your opinion. Based on what? So, look, and by the way, I think I should make it very clear. Paper Bitcoin is a real thing. People trade derivatives. FTXs exist out there. And I put out a tweet some time back being like, there is probably an exchange out there that's unbacked, and you've probably never heard of them. They're probably called like, BitX or something, some weird thing that you've never heard of in some backwater country that you don't even know exists, right? And they've got 12 Bitcoin. These entities aren't big enough for you to care about. The actual risk, guys, is that Coinbase has so many coins, like 3 million. That's a huge problem. That's a honeypot risk. So the risk isn't that they don't have them, so they have way too many. So, I'd love to see some evidence and some data. I just simply look at market structure, see price go up, people selling. To me, that's enough. Like, that's enough. Enough data providers have seen the exchanges and seen the ETFs that, like, until you can prove those guys wrong in aggregate, then it's just a really baseless case in many views.
Yeah, no, I'm the same way. Just like given the simplest argument here, guys, why is the price not moving? There's a lot of sellers in the market, and this last week was one of those like perfect examples. It's like,
Totally.
why isn't the price moving? It's like, guys, there was like 107,000 coins that like hit the exchanges and got sold. You're like,
Yep.
I don't know about you guys,
here's
but
the
you're
other
not
one.
scooping up tens of thousands of coins.
Yeah, you see these big wallets move, and I've seen some people saying, like, that's the first time I've ever actually seen an old holder selling. And I'm like, well, look at the rest of the chart of, I call it revived supply, coins that are old that have come back to life. Isn't it funny how that spikes literally every single time we go up? Literally every single time we go up a lot to a new all-time high, revived supply kicks higher. They must just be doing a consolidation. They must just be doing UTXO management because 100K was just like the right time for them to do it. It's like, no, guys, they're all selling. It's just how this works. And by the way, that's okay, because you're swapping over the holder base. And here's actually the really bullish thing about this. Think about, we've talked a lot about institutions, big entities, like price insensitive people, massive institutions who are not buying Bitcoin for today. They're buying it because all their macro views are saying gold and Bitcoin for the next decade. Strap in, get as much as you can, sit tight. That's what they're hearing. Their cost basis for their first purchase is 100K. They are in at 100K. They don't care that traded at 1K or 10K or 20K or 50K. That doesn't even exist on their price chart. They bought in at IBIT and FBTC at 75 and $100, and they know Bitcoin's 100K, and that's it. That's their starting position. So when you entered the market as a Bitcoiner, go back and think about your first price. This is their first ever price. So everything above there is what they're buying for. They're not buying because they want it to go from 100K to 75K. They're buying it because they also think 75K is a discount. So the ceiling above us is much higher, but it's going to take a lot longer to happen. And by the way, that's great. That's actually a really, really good result.
Yeah, you just made me even more bullish than ever. I came into this. I have one of my friends. This is a little tangent story. He's been tweeting me his chart boys stuff and his trader stuff, and he's like, dude, it's gonna double top. And I just it takes everything in me to just start
Based on
trolling him. Yeah, exactly. He's like, dude, my lines, my lines and my bearish dibs on the daily, and I'm like, dude, do you not see what the investor capital flowing into the market right now? And you're just saying, it's like, just think about it, your first buy, whether you bought it 1,000, 5,000, 10K, 20K. If that is your first buy number, you're like, this is going up way higher. I don't care about this daily stuff.
20 billion in fresh dollars come into the ETFs since the April low. Just in that window, since the April low, we've seen 20 billion. And in total, that's about 35 or 36% of the total capital that flowed in. So 30% of all the dollars that have flowed into those ETFs have occurred in the last, 2.5 months, something like that, 3 months. That's what we're talking about here. It's mega, mega bullish. And that's the thing. When I talk about sell side, it's actually bullish because you're seeing a bullish selling. Now, you're actually seeing people rotating their coins, new holders coming in, and they're coming in at a size that is just really, really hard to wrap your head around. And by the way, Mr. 80,000 Bitcoin can only sell that once. And Mr. Pension Fund, he's buying because he's looking long-term liabilities. He's not a seller. Michael Saylor, he's not a seller. A lot of hodlers out there, you're not sellers. there's this pool of old holders that once they're flushed out and they've done their thing, and 100K is the perfect place. And there's another line that I see very, very often that I should probably just touch on. People say, but we're at 123K. Why didn't they sell then? Like, why are they now selling at 115? It's like, first and foremost, the difference for them between 10 billion and 9.8 billion is irrelevant, right? So they're already that big up. Second of all, things take time and things change, right? Think about where you were. Like, if you go back to 2021, a lot of people bought 58K gang. Imagine how much your life changed between 2021 58K and 2024 58K. Some of you probably had kids. You probably bought a house. You probably need to like upgrade your lifestyle. Things have gone right. Things have gone wrong. Life changes over a 5-year period. Now, granted, we're talking about over a short period of time, but if you're trying to move around 10 billion, your lawyer may not be able to sort stuff out for like 6 weeks, right? This is a big thing to move around. Like, it takes time. So, there's just a process to everything. And markets, I like to use this line, markets are a process, not a result. And you can really use that for life as well. If you're living life hoping for that $1 million price point because it's going to unlock something in your future, you've missed the point, because the journey between here and $1 million, that's the fun bit. That's the part that we're actually here for. So enjoy the ride, because once you get to the end, it's just not as good as the fun you had along the way.
Totally true. Just a philosophy guy by nature. I love it.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending, with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially, what they do is that they help their clients unlock the liquidity of their BTC, allowing you to hodl while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledn.io today.
I do want to definitively get you, I think, to destroy the idea of the supply shock. I'm just like you. I'm like, look, there will always be a certain amount or a certain price that people will sell Bitcoin at. Like, this is just how the market works. And I've been seeing you go back and forth. And one of our good friends, you actually go back and forth with him on Twitter about the supply shock. He's also Australian as well. I'm sure you know who he is. But what is your take on the supply shock? I know you touched on the exchange numbers, or Bitcoin on the exchange. And I know there's a lot of memes, like the mother of all supply shocks, like the supply shock is coming. It's coming soon, man.
Yeah.
So what's
the
your
second
idea
coming
on
of the supply shock?
Yeah. What do you think of the memetics around the supply shock? Or rather, is there any factuality to this?
Yeah. So look, I'm going to put this in the same bucket as market manipulation and price suppression. Yes, the market is suppressed and manipulated. That is also how markets work. In the short, it depends how you want to frame it up. Every time you buy Bitcoin, you manipulated the price a little bit to the upside, but you did manipulate the price. Someone else out there just has more money than you, and they are trying to make money off other people who have more money than you. And sometimes, if you actually go down into the order books, it's like a fist fight, and you'll see it. Like, if you're looking at like one of the big exchanges, actually, it's not hard to draw Mr. TA Man's lines, right? Big resistance. And look, next time Bitcoin gets to the all-time high, if you're lucky enough and you're sitting at the screen, pull up Binance or Coinbase, and watch as it trades up towards, watch the order book as it gets up towards the all-time high. The moment it gets there, it lights up like crazy. People are just buying and selling and chopping and changing. And you got to remember that they're buying spot and selling spot, but that's because they've also got options over here and futures over here, and they're trying to defend this, and they want to get to this. Like, it goes chaos. So there's this phase where, like, yes, some people call it manipulation, but it's also just how markets work. It's like a big fist fight down there. Now, so that's manipulation is there, but over the very, very short term, over the small time horizon. So there is truth to it, But it is not the reason. Like, I find it hard to believe that there is market manipulation and we're trading at checks notes $115,000, with no pullbacks. They're really bad at their job if this is their view of like, this is the outcome, we've done the job. Supply shock is in the same camp where there is truth to it. The idea is every time the market just rips higher, it's because we ran out of sellers. Now, 100K, this zone, is a very obvious place where we're going to have a lot of sellers because it's like a stretch target for so many people. There's going to be a lot of selling. It's going to take time. Once a coin gets sold, it doesn't just go from one guy into a cold card and sit there forever. Sometimes it's got to trade between 10, 50, thousands, hundreds of thousands of different transactions until it finally gets out of the market and goes into Sailor's wallet or your wallet or whatever else. So markets are a process. Coins have to actually be absorbed, and that takes time. People's lives change, so on and so forth. There are periods in time when there just are no more sellers. And when there are no more sellers, the marginal buyers who are coming in, and this can be your sat stackers, it can be Sailor, it can be whatever. And this is why you'll rarely see Michael Saylor buys $2.5 billion. Market's usually sideways or down, because what he's done is he's taken a pool of coins out that are not going to get sold in the future. But he doesn't necessarily hit the market bid and just send the price to the moon, because that's not a good idea. No one wants to do that. But those coins will not be sold. So over the course of the next 3 months, he's tightened things up. He's brought those coins out of circulation. There are points in time where the supply squeeze is literally that there's no more sellers. But what happens when the price goes up? And this is why I say, like, anyone who's sharing exchange balances, if it's plus or minus 100,000 coins from 2.5 million, mute or just get rid of that chart because it's useless. Useless information. It's always been there, because when the price goes up, you know what happens? Some other 80,000 whale goes, that's my price, it's time, and then they sell. So they bring coins back to market. And just think about it from your perspective. Imagine you're the only guy in the world who's going to sell, and the price goes to 200K, 300K, 400K, 500K. Just keep ratcheting it up. At some point, you're going to go, oh my God, I'm sorry, that's it, done. And you'll sell some of it. At some point, it's like the marshmallow test. If you leave the kid in the room with a single marshmallow, you're going to get 2 marshmallows if you don't eat this one. And you leave them for 6 hours, I guarantee you that marshmallow is gone. If you leave it long enough, you're going to eat the marshmallow. So it's just what human beings do. And this is how I try to frame it up for people. Just because you can't see why you would sell at this price, put yourself in someone else's shoes who's been around for a lot longer. They've got different life constraints. They've got different needs. They've got a lower cost basis, whatever it is. They may be selling your entire stack, and that's them peeling off one of their UTXOs. You just think there's people of all sizes in this market. So yes, the supply squeeze, like market manipulation, it's a thing on the small time. But this idea that we're just going to like gap up to 1 million, if we wake up one day, and here's a pro tip, if you wake up one day and we're at $1 million, put your seatbelt on because we're probably going down about 80%. You don't want the market to go straight up because that's going to create a really, really nasty drawdown because, and this is a great example before, but why didn't they sell at $1 million? Because we're at $1 million for 25 seconds. We're now at 900K. Do you like that? Yeah, you like that. So, what about 850? What about 750? Oh, next thing you know, we're at $500,000. That's actually still a really good price. Let's keep going, keep going, keep going. Oh, we're back to 100K. Well, I can't sell now. It's back to my cost basis. I'm going to start buying again. So that's just how markets work.
Absolutely love it. I couldn't agree with you more. And you're able to use the on-chain metrics and your experience in markets and really just being like in the trenches analyzing this. And for me, I'm just like been around for long enough where you're like, guys, let's just think this through a little bit. Like, you just think of how you work. But as you said, a lot of people can't really get out of their own kind of point of view And you can tell they're like, no, I would never sell. You're like, yeah, I get that. But like,
someone else would.
Someone else
is a good
would.
thing. On-chain data, at the end of the day, what is it? Like, so a lot of people just like, oh, it's on-chain data, and they just like call it on-chain data. What is it? It's actually just metrics describing you, me, and everyone listening to this podcast. Yeah. Every single person who holds Bitcoin, we're just looking at the UTXO set and saying, how profitable is it? Where is the average guy? How profitable are guys who bought 6 weeks ago versus people who bought 5 years ago? And we're at a level right now where people who bought a long time ago are so profitable that they usually start selling. Oh, look at that. They're selling. How funny. Their incentive structure hasn't changed, and they're doing the exact same thing that they always do at this level. So what on-chain data really is, it's just a measurement of us, and it helps a lot of people that a lot of my subscribers say, it's like a second opinion. I've got my Bitcoiner instinct. I've been around markets long enough that I've just kind of seen how Bitcoin trades, and then I see the market not going up, and then I see the sell side, and then I see how much profit people are in, like, yeah, you know what? That actually makes a lot of sense. Like, my Bitcoin instinct is confirmed, and it helps me tailor and hone in and really have a decent read on what's going on, because it's all of us. It's just our collective decisions in chart form.
Yeah, I used to say, and until the chat kind of corrected me on this, I used to say the Bitcoin price is a real-time metric of people's understanding of Bitcoin, of what it is. And they're like, no, dude, it's the lows. Like, it's the Bitcoin lows of people's real understanding of Bitcoin, because they're true believers and they're hodling. I'm like, yeah, that makes sense. But as you're talking, I'm like, no, I think it's the on-chain metrics. It's the real-time understanding of what we all collectively think about Bitcoin. I absolutely love that. I'm going to definitely take that from here on out.
Look, we're in a phase where I wake up every day expecting metrics to break, because the market cycle's changing and things evolve and all the rest of it. So far, nothing has broken. I've been actually quite surprised. So I live in this world, again, you got to hold two views at the same time. I live in the world where I'm expecting every single one of my metrics to break every day, and then every day that it doesn't break, I keep using it, right? I'm not gonna lose something and drop something off the back of the radar until it breaks. But what I am doing is being very flexible in how I think about things. So, and it's because I'm in the trenches of this data deeper than most people. I actually don't look at them as like, oh, it has to hit this level and that's a top and here's my horizontal line. I actually don't look at it from that perspective. I look at it as just a source of information. When a metric is moving higher, it's telling me people are more profitable. They're starting to sell. Coins are coming back to life. People are hodling. I just look at it as packets of information, and I use it as part of a broader picture to say, okay, if that's happening, let me go and check this. Oh, and now I need to go and check derivatives to see what's happening over there. So to me, it's all just information. I'm trying to piece together my best possible read of what I think's going on, because in many ways, I just want to prepare for. If we go to 150K, I don't want to be surprised. I want to know exactly what I'm going to do in that scenario. If we go to 75K, and I was writing about this I think I started my first piece on that air pocket was in December. So we're trading like 105K before we've had any of the tariff tantrum. And I said, guys, this is not a prediction. I don't know if this is going to happen. But that zone down there between 86 and 75, no one bought coins in that area on the way up. We might go back down and just find out what happens down there. And this is not because I can predict the future. I absolutely cannot. No one can. But I was saying, mentally prepare and think about what you will do if you wake up and the price is 75K. And we went to like 74.8. And I just never want people to be a deer in the headlights, because like it might happen. I don't know if it will, but it might. And if it does, this is probably why, and this is what it means. So you can kind of reason about it months and weeks in advance. So then you can make a decision. And for me, like even me, I'd already been talking about 75K. And then the price went to 75K. And I was sitting on my couch and my best mate and co-founder walked past and he saw, I was like, bro, you look a little bit white. And I was like, yeah, I kind of just put way more money than I had intended into Bitcoin, because like I'd already made the decision. So my conviction was high. It still felt awful, right? I do this for a living, studying this. And I'm like, this feels horrible. Like I feel like I'm making a horrendous mistake. It wasn't a horrendous mistake because I'd made that decision with a clear-cut mind, because you don't want to make a decision when the market's doing this or when it's water falling down. Both of those are really bad times to be making like a life decision. I try to make them well ahead of time.
Love it. Yeah, I mean, even as Bitcoiners have been around for a while, catching knives hurts every single time. It doesn't feel good. And then in hindsight, you can rationalize it however you want. But actually, while you're talking, it was making me think of how much credibility do you give the CME Bitcoin futures gaps?
Yeah, I put it in the same bucket as what I call air pockets. So when I talk about an air pocket from an on-chain perspective, it's a zone where the price goes up too quickly or down, but usually it's up, goes up too quickly that there's just not enough transactions in that zone. So I like to think about markets as a confidence machine. And in that Chopsolidation range in 2024, we developed a very, very strong collective global consciousness that Bitcoin belongs above $1 trillion market cap, which is 50K. Every single time we went below there, the dip was bought. We proved to the world that we belong here. And the next step, we're at 100K, which is double that, 2 trillion. We don't know what happened. There was like, we know people like it at 75, and we know people like it at 90 to 100, but we have no idea if anyone likes it at 85 and 75. So the market went back down there to revisit it, to say, well, you loved it at 95 and you bought all these coins at 100. Do you like it at 75 again? Like, are you still there? Do you still have that confidence? And the market said yes, because it bid it, and then away we went. I would put CME gaps in the same thing, where over the weekend when the CME isn't trading, the market opens and it's at a certain level above or below, it's always happened. I've read trading textbooks from decades ago, and they all talk about these weekend gaps, and they just become targets. They're just one of those things that the collective consciousness goes, we don't actually know what the confidence is here. Let's go and find out. Let's go and test it. And they just become magnets. So I'm sure there's 1,001 forces out there that force this to happen. I just have seen it happen enough times. Even our current market structure, 116 to 110, air gap. Where are we? In the air gap. The market just had to go and find out. It's just got to test it. So it's more about just understanding that these things exist. I don't look at CME gaps, but I look at these air pockets in the on-chain space, because the bigger they are, the more challenging it is, right? No one wants to go from 100 to 75, but you want to be prepared for it in case it does.
Love it. You know, before we started, I didn't know we were going to just kind of check off every Bitcoin trader fallacy here that we all constantly talk about, but we are doing that. So I'm going to just double down on that.
Let's go.
Yeah, the next one is, what's your take on diminishing returns? That seems to be all the rage right now.
Well, so my base case is, what's your anchor point? So, for example, my current thinking on the way this cycle plays out is I think the top actually looks somewhat similar to other tops. I don't think we get anything that's overly different. My biggest concern, and what I'm doing a lot of work in the background analyzing, is I can spot a euphoric period. That's easy enough to see. What is much harder to see is if it just dies with a whimper. And we just kind of fold and there's just no energy and it goes. So that's where I'm paying a lot of attention to, because that's harder. That's much, much harder to spot. I have some tools to try and track that, but I'm building out my suite now. So those are the two things I can kind of track. My base case, what my expectation is, if I had to kind of plot out the next 12 months, I think we have your typical top. It'll be driven by all these treasury companies. Once the market starts moving, I think we're close to that euphoric phase. Open interest is climbing a lot. There's a lot of leverage coming in. People are willing to speculate. You can smell the speculative fever in the air at the moment. It hasn't quite gone yet, but you can see that everyone's like one click away from taking some proper risk. So that's where we're at. We've kind of got all the kindling is built on the fire. We just need to get moving. My base case is that people don't know where to start the next bull market from. So let's imagine that we peak at, just for simple numbers, somewhere between 150 and 180. Just imagine that we peak there. There'll be a lot of people who are like, oh, diminishing returns, blah, blah, blah. What if we pull back 40% and then we bottom out? It takes 8 months, maybe a year, and then we start drifting higher again. And we don't get the big 80 or the 50 even that people are expecting. Will people go and change their cycle charts? You know, those ones that show performance since the cycle low? Will they re-anchor to the bottom of that correction? How big does the bear have to be before it's a bear now? And what if people just kind of lose track? Oh my God, it's a super cycle. It's but what if we've already had 3 cycles this cycle? What if we had the first one up to 73 and then we actually have to anchor back down at 49K for that chopsolidation period when the yen carry trade blew up? What if we have to anchor from there? And then what if the next one was the tariff tantrum and that was another miniature bear market? What if we're actually discharging a lot of this bearish energy by just going sideways and chopsolidating for 6 months? What if that's the process now? And people have just got where's your diminishing returns? So based on what? From where? Where's your anchor point? And all of these questions, I don't think people get lost in the bull. I think people get lost in the bear that follows. And for me as an analyst, I'm super excited because that means I have to be on my toes, trying to just look at every day by day and just see how it evolves and see how data changes. And it's fascinating. I love it.
I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
Yeah, no, you made a great point, because I was looking at the chart the other day and I was kind of doing the cycle theory, And I was looking at the chart and I'm like, well, where do I even, and I was just kind of trying to do a comparison of like, okay, if the last cycle was like 600%, let's see where just, kind of just having fun. And I was looking at the chart and I'm like, which one's the bottom? Is it 24? Is it 23? Is it 22? Like, which bottom do I actually, start to make these crazy, just fun predictions from? And I think you made a great point. It's like, do we readjust the cycle bottoms because now we're in this new market structure? Like, where's the bottom of the last market?
At another level, Bitcoin's always had this weird property where like it tops in December and it bottoms in November and December. It just has this weird like date thing. Well, we had the yen carry trade in 2024 was like the 5th of August. We had a sell-off recently on like August, which we could set some kind of a low and start moving. So like we're actually getting these dynamics where like the same dates keep showing up. And like when I write a report, I'll be like, I'm pretty sure I wrote about this like a year ago. And I literally go back a year ago. I'm like, holy shit, I did write about this a year ago. It's like exactly what's going on. So you get these like, there's like this new internal pattern that's starting to happen. And by the way, if we top out in the next like 30 to 60 days, the cycle is exactly the same as every previous cycle. But is that the top or is that a top? And this is the thing that's going to break everyone's noodle. They're not going to know whether it's the top or a top because every the top starts as an a top. We don't know until it's like deep into the bear. You're like, okay, it turns out that was the cyclical beast. Because like that could have been it. People are calling a bear market in late 24 and they're saying, I think it's over. And that was just like the shittest cycle of all time. And then next thing you know, we're at 100K. And then people are saying, oh no, it's another top and it's a double top. And like, it's hard. People are losing their mind and I love it.
Yeah, no, 100%. And actually, right when you were just wrapping up here, the constant kind of classic Bitcoin trope of the Bitcoin price is the least interesting thing about Bitcoin. And you're like, yeah, I can see where you're coming from. But the way you break it down, you're like, no, that is literally the most interesting thing about Bitcoin.
Yeah.
I absolutely love it. All right. So people just got basically an hour of how to think about the price of Bitcoin.
How to think about the price of Bitcoin.
Yeah, I'm sure they're sitting here like, okay, cool, bro. Like, I really appreciate all this analysis and points of view here. But like, where is the price going? Has the bull run even started?
Guys, we're up 7x from the bottom. Yeah, it started. We're deep in it. So often the way that I try to break up the market structure, and there's various price models I use as like my thresholds for this. I would generally say that we're on the cusp of 1 foot in, we've stepped into, we're in that process of the euphoria phase. So, and it may not feel like that, and you may not believe that, but the underlying structure of the market certainly looks a lot more speculative. And this really started in April, actually. That April bottom that we put in, everything up until that point, I would say was like, I actually couldn't construct a bear case. I really, really struggled because it was very healthy spot, very like the ETFs were a big factor. MSTR was a big factor. There was a very clear spot dominant market and open interest wasn't, like it was increasing, but not aggressively. Since that April low, derivatives have really crept up. We've got a lot more, both options and futures were at all-time or just off all-time high. If you take all the open interest in the system and you compare it to the Bitcoin market cap as a size comparison, we've just blown out to new all-time highs and it continues moving higher. So the market is now more speculative. You're seeing penny stocks with a cold card getting bid up by retail traders, like all these treasury companies. Like there's varying degrees. Like everyone thinks they're a sailor, but sailor is sailor, right? There's a very, very, and I can put as many varies as you want here, large gap between 620,000 Bitcoin and 6 Bitcoin. There's a very, very large gap, and most of these companies just ain't there. And there's a long way for them to get to where sailor is. So there's a lot of people willing to speculate on those smaller companies, and that's fine, but it's important to recognize that we're at that phase. We're at this phase where people are willing to take some stupid risks and the market can reward some questionable decisions and paint it and say, it's actually the next coming of sailor. And like in 6 months' time, you'll be looking and going, I was an idiot. So you just got to be careful with those kind of things. So we're there. I can see the explosive move. Once this thing gets going and once we kind of exhaust this 100K zone of sellers, I mean, people who are buying at 100K, they're not selling at 110, right, or 120 or 130. They're looking for a proper move. If we get to, like, the world is just mean reverting. You can choose whatever metric you want. They all kind of cluster around a similar ballpark. Once we get to 150K, it's very, very possible, by the way, in a bull market, we would hit that level on all of these mean reversion metrics. 150 is totally in play, but we're starting to get to like the 10% tail. If you think about like the bell curve, if you think about the bell curve, the right-hand side is like bull market extremes. 10% of all days have been higher than that. Once you get up to the 180 zone, we're talking about like sub 5%. So the odds of us, we can get there, but we've only ever got there 5% of the time. So the way to think about this, the higher we go, the more the mean reversion models are like a slingshot being stretched too far in one direction. At some point, it's just gone too far. So unless the slingshot breaks, which is not what you want to see, it's going to want to swing back towards the mean. Periods of Chopsolidation are very good because they allow that mean. So you kind of pull the slingshot back, but then instead of letting the slingshot come back, you actually allow your hand to de-stress the thing. So you take tension out by allowing the means to come up. It could be the 200-day moving average, for example. You chop sideways for 200 days, the 200-day moving average is going to come right up to your level, and you've actually de-stressed that mean reversion model. So the longer it takes to get there, the more these price models can go higher. The more demand that comes in, the more these price models can go higher. But as it stands right now, 150, 10% of days are up there. 180, you're really in thin air. If you want the ultra moon math, sometimes we get to it 2.4 times the 200-day moving average. That's like 240K. If you wake up and it's a 240K, the odds are it ain't going to be there for very long. That's not a sustainable level. We can get there, but it's probably not staying there. We'll get there eventually and stay there, but it's probably not going to happen tomorrow.
Love it. Love it. Okay. One last question before maybe we dunk on my friend real quick. How long do you think, it sounds like you still kind of believe in cycle theory, but you're saying maybe these kind of run upwards are elongated here. So do you think the cycle theory is still intact, or are you going like, I think we're just going to kind of, run up, chop sideways, and it's like maybe a longer 4-year cycle, which I mean, just by saying that it broke the 4-year cycle, but that's what I hear people saying right now. It's like, no, it's going to be an elongated 4-year cycle. And you're like, that's literally by definition breaking the 4-year cycle, right?
Yeah, exactly. It's a good question. And like, truthfully, I don't hold any views about how long the cycle should or could be overly strongly. I prefer to look at all the information I've got and be like, show me when bull market things are ending and bear market things are starting. That's the way I look at it. Now, what I will say is that this euphoric phase, and as I said, we've stepped into it. We haven't run into it yet. We're not sprinting. But once we're in this phase, as you all know, bull markets, like euphoric bulls where it's just unstoppable upside, they just have a half-life. They cannot keep going indefinitely. So this stair-stepping stuff, go back and look at gold's price when they, from the 2000s up to 2008, that just kept going. Like 2012 was just this long 8-year, 10-year long bull market. So these things can just keep happening. For Bitcoin, we may be in one of those events, and that's where like the bear market won't be as deep and it kind of breaks everyone's perception. And like, have we stopped? Is it a new cycle? I don't know. A lot of those things can happen, but euphoric phases, and this is why I often say to people, you actually don't want retail to come on board, because now you've just subscribed yourself to a 1.5 years of horrible price action. You actually don't want that to happen. You want retail to stay as far away as possible because they have to be clueless, because that's the end. That's the it ends. Now, yes, it's very exciting, but it's fleeting. It's brief. You don't want that. So, that's how I think about it. I'm looking for the signs, and my general framework is too many people buying too many coins at too high of a price. So what we see is that lots and lots of people buy lots of Bitcoin, which means people sold. At the top, price falls down below their cost basis, and suddenly unrealized losses shoot through the roof. So far, we haven't had an event where the losses get so high, I'm like, I think that just broke confidence. The best example I can give people who are probably going to recognize this, that sell-off in mid-2021, the China mining ban, May 2021, that sell-off. If you lived through that, you knew deep down in your gut that even though it bounced to new all-time highs, you knew that something was wrong there. That sell-off didn't feel right. It was angry, it was nasty, and it shattered confidence. That is exactly what happened. The more I study that sell-off, it killed the bull. It doesn't even matter that we went to a new all-time high. That bear market that followed was baked in the cake because confidence was just dead and the market never recovered from that sell-off until FTX blew up. We have not had even remotely close anything like that. I'm waiting for that kind of event before I flip over and say, all right, guys, I think it's cooked.
Love it, dude. This is an incredible comment. Actually, I do want to dunk on my friend real quick. And everyone's like, why are you doing this? Because there is a point here. He was telling me, he literally texted me today. He's like, doing some TA chart stuff. It's like, I told you it was going to drop and I'm going to sell some right here. So to people that are thinking right now, I'm going to ape out of this thing, what would be your advice? Well, first of all, this isn't financial advice. We're not doing that. But just so I can dunk on my friend who is telling me, I told you this was going to dump. It's over, bro. Next leg up, I'm selling out. And I'm like, no, why would you do this?
Yeah, I've got 2 points to this. The first one, which I find very funny, we were over in Nashville for the conference last year. And I did my talk, and it was specifically on this topic. I went back and I took away all the axes, so you don't know what the metric is. And I showed an on-chain metric and me buying the top in 2017, selling the bottom on the first sell-off and thinking, don't worry, I'll buy it back lower, buying the next top. So I put my personal buys and how perfectly incorrect I was. And then I bring in the metric that I now understand what it is, showing me selling at a loss, thinking I'm a genius, buying in profit because I found some new indicator that told me we're going to the moon, selling it again because I realized I'm an idiot, and just like getting everything perfectly wrong. So I now look at that and go, I'm going to do the opposite of my 2018 self. And the funny thing about that talk is Saylor was on at the same time. So as you can imagine, I had 8 people in my room. It was a very Andreas Antonopoulos moment. I'm talking to 8 people, and Saylor's got a crowd of, the whole room telling them it's going to 13 million. Like, by the way, guys, which one's more actionable and useful? I know it's going to 13 million, but like, when? Okay.
Yeah.
So there's that kind of component. And then, sorry, remind me, your friend was talking about like selling and buying back later, right?
He threw like a chart and it dumped, and he did like a, it's going to have another leg up, and this is where you sell on this part, and then it's going down, and I'm like,
good luck. So the statistics show, the stats show that Bitcoin goes, and this is what happens with these day traders. This is why they get wrecked. The stats show, if you look at where the Bitcoin price goes on a daily basis, 40% of the time, it doesn't go plus or minus 1% in either direction. If you can believe it, for almost half the time, it doesn't go in either direction anywhere. 30% of the time it goes up, 30% of the time it goes down, plus or minus 1%. So now think about a day trader. They go levered long, right? There's a 70% chance that it's going to go sideways or down. And in both of those instances, they lose because they lose by funding rates or they lose because it went below their cost basis. They've only got a 30% chance that they're going to win, 1 in 3, less than 1 in 3. That's a really shitty odd. But now, if you take that exact same study and you do it on a quarterly basis, it massively skews to the upside. So what happens is most of the time, Bitcoin goes nowhere, chopsolidates in a quarter. And every so often, there's a 100% plus quarter. And if you're chopping around and thinking you're a genius trying to get in and out of this market cycle and be like, oh, don't worry, I'll buy it back later. I actually ran this study. It's not a perfect study, but it gives you a good example. I looked at all of the previous market bulls and I removed the 10 best days. So this is your day trading, you get out of the market, and then we just have one of those green candles. You're like, oh shit, I missed it. If you miss the best 10 days, you're flat or down on the entire market cycle. So every red candle you go through, every sideways boring candle you go through, all the ups and downs and highs and lows, you miss those 10 best days, you actually miss the entire Bitcoin cycle. What are you trading around it for? Are you going to pick those exact 10 days to like get out before and get in? And then by the way, if you do the opposite and you try, like, why are you day trading? Because you want to miss the 10 worst days. So the trade-off here is that the market cycle might go up 10x or 6x, whatever it is. We're up 7x from the bottom. So you might go up 6x, 7x. If you just miss the 10 worst days, you're up like 10x. Okay, that's great. That's obviously a much better return, but you're risking an actual literal zero for the last 5 years in order to get that extra cream on top. Just sit and hold a Bitcoin, guys. What are you doing? And the last thing I'll leave people with, because there are going to be people out there who do want to take profits, and that's, by the way, that's totally okay. Make your plan and have your decision framework for when that's going to happen, what price levels, where you actually do want to do anything, buy, sell, whatever. Write it down right now while the price is going sideways and doing nothing, while you're cool, while you're calm. The worst thing you can possibly do is when the market is ripping or waterfall selling off, adjust your plan. Don't do it. follow your plan because you're making that decision right now when you're actually thinking clearly. In the heat of the moment, you will adjust your plan and you will end up making bad decisions. And most of the time, that's actually lump summing way too much money at the top because you think it's going up forever, Laura. It is going up forever, Laura, but it also goes down a lot and it goes sideways even more. So like, don't make a decision in the heat of the moment. Write it down now, have a plan and stick to it. Do not trust your euphoric or your terrified self because you will make bad decisions by comparison.
Well, James, I think this is a great combo. I learned a lot. I know the audience learned a lot. It really kind of confirmed a lot of the intuitive feelings that I have here. And I'm like, okay, man.
Trust your gut.
Yeah, it's like you're right side of the bell curve, maybe. I'm like left side of the bell curve, and I'm like, hey, I'm not, I'm at least I'm not a midwit here, and I'm not trying to day trade.
The midwit is the majority, by the way. That's the whole point of you want to be on either tail, right? And the midwit thinks they can trade this thing. The Jedi and the Grug, they're both like Bitcoin good, orange coin good, number go up. Just orange coin good, number go up. Sit tight.
Orange coin good, not selling. This is the way. Well, James Check, aka Checkmate on Twitter. Guys, if you like what James is saying, I'm going to have to plug your newsletter. Go to checkonchain.com, join the newsletter. You're giving this type of insights constantly, and I think the people should follow along. So, James, thank you so much for coming on today. Guys, I'm sure you learned a lot. Probably rewind this video and watch it again because there was a lot in there. So really
I have one more tip
man.
that I think is
Let's
worth
go.
sharing. A lot of people ask me what I'm going to do this cycle. And I'm very honest. I tell everyone what I do in my newsletter. My approach is like, at the end of the day, what do I not want to do? I've been around Bitcoin long enough. I don't want to buy the top again. I don't want to buy everything at the top again. Like I've done that. I've done it multiple times. It sucks. Yes, it's great in the long time, but like, imagine if I didn't do that, I'd be better off. So what is the end result here? If I don't want to sell my Bitcoin, there's a point in my model. So my decision, what I've written down, I'm just going to stop buying. I was going to turn off my DCA. When the market's overheated, I'm just going to stop buying because then what do I end up with? I keep all the coin that I've already bought and I have spare cash. It's literally like selling minus any tax liability. It's the best thing to do. So that's my plan. My plan is I'm just not going to buy as much at the top. Like that's a perfectly valid plan. So that's another way to think about this stuff, right? You don't actually have to sell. You can also just like not buy. And there's nothing wrong with that.
Dude, that's blasphemy. Telling Bitcoiners not to buy Bitcoin.
But then you can buy more later on. That's
but
the point.
You can buy more later on.
Because you've
Life
all
hack.
done this before. You don't want to be 58K gang. Like if it's 580K gang, like strap in, fellas. It's going to be a long ride.
Yeah, if it's 580K gang, just stop buying maybe a little bit and you have more money when it comes back down. It's kind of a no-brainer. All right, James, that was awesome. I'm sure the audience loved that. Really appreciate it. Guys, you already know the deal. Simply Bitcoin IRL. Go check out our live show. Go check out all our other content. We are Simply Bitcoin. We'll see you next time.